If you're a leader of a country who's lucky enough to have both citizens and hydrocarbons, you have a lot of excess cash. So much so that even if you wanted to spend it all, you couldn't. But no matter, you're benevolent and prudent, so you decide to invest it for the benefit of your people's future. You set up a wealth fund, and because you're a sovereign nation, people call it a sovereign wealth fund. The cash that goes into this fund comes from taxes and revenues on an asset that you, as a government, control the legal rights to. There's no way for discontented investors to pull their money. On the contrary, the base capital of the fund, even with zero returns, grows over time as the revenues and taxes pour in. You then hire the smartest people around to invest the proceeds of oil revenues fairly conservatively. And as asset values tend to appreciate over time, your base of permanent capital compounds. As a result of these two factors, linear growth in oil cash flows and compounded growth from investment returns, the largest of these funds are among the biggest actively managed capital pools in the world. Let's take a deep dive into these trillion-dollar-plus pools of cash that quietly own a chunk of pretty much everything. We start our tour in Scandinavia, the land of powerless constitutional monarchs and strong parliaments. By 1990, after 20 years of North Sea oil exploitation and wise regulation, the state of Norway was swimming in cold, hard hydrocarbon cash. It being a social democracy, Parliament decided to organize a fund controlled by the state for the benefit of its people, the Norwegian Oil Fund. Fast forward to today, and the oil fund has $1.2 trillion under management, making it the largest sovereign wealth fund and among the largest money managers in the world. For comparison, BlackRock, the world's largest, has $10 trillion under management, and Blackstone, the largest private equity fund manager, has about $900 billion under management. Okay, so the oil fund is one of the largest investors on the planet, but it acts on behalf of a mere 5.4 million people. If the oil fund were liquidated today, each and every Norwegian would be entitled to about $250,000. That's right, $250,000. This is equal to the median household wealth in Portugal. But the entire point of the fund is that it continues in perpetuity. So what assets does the population of Norway own indirectly through it? It's really difficult to invest $1.2 trillion. The easiest thing to do is to buy publicly listed stocks on a highly diversified basis, which the fund has done in earnest. At a given time, the fund usually has about 70% of its portfolio in stocks. It owns stakes in 9,000 listed equities across 70 countries. In total, this $750 billion equity portfolio translates to just 1% of the global market capitalization of stocks. In other words, although only 1 out of every 50 million people are Norwegian, they collectively own just over 1% of the global stock market. The rest of the oil fund portfolio is in bonds, with the remaining 3% of assets allocated to private real estate and renewable energy. And that's it. An everyday financial advisor would have no difficulty building a very similar portfolio for you through exchange-traded funds. The oil fund is unique among sovereign wealth funds, but by subtraction, it doesn't allocate to alternative investments, a subset of the investment universe that includes private equity, hedge funds, and venture capital. Now let's look at another group of sovereign wealth funds, the Gulf states. These funds are far more adventurous as they not only allocate significant proportions of their portfolio to alternative investment managers, but take matters into their own hands in acquiring or even founding businesses. It sort of makes sense that they do this. Norway's economy is diversified, and the oil fund has a mandate very much like a pension fund, producing stable returns that pay out to Norwegians each year. In contrast, the Gulf state economies are addicted to exporting hydrocarbons, but the world is slowly moving on, and the monarchs and leaders of the region know it. So the sovereign wealth funds have a hybrid mandate, They need to produce annual returns for their citizens, and they need to drive a transition to a more diversified economy. The focus is far more on the latter. Like we said earlier, investing a huge amount of money is hard. The Abu Dhabi Investment Authority, Kuwait Investment Authority, Saudi Arabia's Public Investment Fund, and Qatar Investment Authority each have assets in excess of $500 billion. They're all invested in a diversified basket of equities and bonds, but much less so than the Norwegian Oil Fund. The Public Investment Fund is the most adventurous of them all. Let's go over some of their activities. In 2017, the Public Investment Fund committed $45 billion of the $100 billion SoftBank Vision Fund, the largest ever raised. In the same year, it committed $20 billion to Blackstone's $40 billion private U.S. infrastructure fund. If you even raise a fund, you know who to call first. In 2021, the fund led the takeover of Premier League side Newcastle United, investing around $250 million. The kingdom loves sports of all kinds. In 2022, the fund launched LIV, a worldwide golf tour to rival the PGA. It's committed $150 million in guaranteed money to Phil Mickelson, $100 million to Dustin Johnson, and hundreds of millions combined to other stars. But technology, infrastructure, and sports investments, all of which lay outside the Kingdom of Saudi Arabia, isn't diversified enough for de facto ruler MBS. Tourism is important too. What better way to bring guests than building a completely new metropolis, NEOM, 33 times the size of New York City, the primary feature of which is a 170 kilometers long skyscraper. This is wider than the country of Belgium. NEOM is planned to be completed by 2030. To put it politely, this seems impossible. Some airport renovations take this long, but no matter. The Public Investment Fund is chipping in a cool $150 billion. The Public Investment Fund interprets the Sovereign Wealth Fund in a literal way. MBS is the driving force behind remarkable spending on whatever seems cool and fun. The Norway Oil Fund doesn't make the headlines because it's boring by comparison, predominantly investing in publicly listed equities. Only time will tell which investment strategy will work best. Thanks for watching. What do you think of the Public Investment Fund? Would you be interested in learning more about the Saudi plan to completely transform its economy? Let us know in the comments below. Your feedback helps us to improve our content for what makes this worth it. You.